Go ahead and get started. It is 2 o'clock Eastern, and want to make sure that we make the best of everyone's time. First off, I want to thank everyone for joining the webinar today. For those that are attending it for the second time, we want to send our most sincere apologies for the issues that we had last week in our audio. For whatever reason, the GoToMeeting was not displaying the audio correctly. So apologize if it's your second time around. We certainly appreciate you coming back in. My name is Chris Rossini. I am a Director of Sales here at Avalara. I have been with Avalara since 2014, based out of our Durham, North Carolina office. Also joining us on the webinar as a presenter is someone that most of you folks have heard of, Nicholas Boucher. He's a Partner Sales Manager here at Avalara. Has been at Avalara almost a year, going on close to a year. It comes from a long background of advertising. Nick will get involved with us here towards the end of the webinar, and I'll let him give a proper introduction. So the webinar today is titled Making Sense Out of Sales Tax Compliance. Those of you that are on the webinar that have had to deal with sales tax compliance in the past, in keeping up with automating tax rate calculations, filing of returns, exempt certificates, and everything in between can understand and realize how cumbersome that it might be. So the whole idea of the webinar today is to give you a little bit of background on what sales tax is all about, what kind of triggers and things we're seeing in the marketplace from a Nexus perspective, and then we'll dive into a little bit around what Avalara can do to help automate that entire process. So a couple of things, we do have the chat window up. Everyone that's an attendee is on mute. So if you do have a question as we're going through this, Nick's going to be monitoring the chat box. By all means, type in your question to the chat box there, and we will certainly be able to answer those questions as we can. So one of the first things that I like to talk about when we're talking about automating sales and use tax, or even talking about the topic of sales and use tax, is the concept around Nexus. And the definition of Nexus is that you've done something inside a particular state or a jurisdiction that has meant that you've triggered an activity on collecting and remitting sales tax to the Department of Revenue in that particular jurisdiction as your quote-unquote luxury of doing business in that state. Some of the easy ones to think about is that if you've got a piece of property, such as an office building, warehouse, distribution center, what have you, if you've got a location or any type of physical property in a state, that's enough to trigger Nexus. Another one has to do with payroll. So if you have someone on your payroll, whether it be a subcontractor or whether it be a W-2 employee, and they're living and performing work in a particular state, that's also enough to trigger what's called Nexus. Those, again, are black and white. Really easy to pick up on, really easy to determine. If you've got a piece of property, you have Nexus. If you have someone on payroll, once again, you've got Nexus. But on this particular slide, I'm trying to illustrate and show you that there's other activities that states are getting really creative with in causing that Nexus generation. See, if you really think about it from a high level, the states and the Department of Revenues, they're all looking for ways to increase income. They're looking for ways to get their budget more in line. Nick and I, as we mentioned, are based out of Durham, North Carolina, which is right outside of the capital of Raleigh. And we see it frequently every single year when the state of North Carolina goes to do a budget, there's typically a shortfall in the budget that's being requested versus the income that they've got coming in. And I think that you would find that that's common in a lot of states. States just are not ever able to have enough revenue coming in to balance off that budget. That's why you see states getting in on the lottery train. North Carolina was one of the most recent ones to do that. We didn't have a lottery as of 3 or 4 years ago. And it's one of the ways that the state is tapping into resources to generate revenue. For North Carolina specifically, it's to help with education. So I say all that to bring back on Nexus. States are getting more and more creative, and they're widening the gap and the reasons for what a company can help generate tax on. Because if you live in a state and you're buying a product from a company that doesn't have Nexus, then you're required to do what's called a use tax. And just unfortunately, the end user that you're selling to probably is not calculating and not paying that use tax to the state. So they're missing the revenue there. So when you look at things like if you own or lease property, like we mentioned about, but if you have some sort of inventory, if you're doing some sort of trade shows, if you have a drop shipping relationship, a lot of things on here that fall outside of that black and white area of property and or employees. So once Nexus has been determined, then you've got a situation where you've got to do all of this other stuff to keep up with it. So you've made the determination that you've got Nexus in this handful of states. You've really not done much research on it. So this is really what needs to happen in order for you to do the research and do the things that you need to do to become compliant as it relates to these new states that you're moving into. One has to do with all types of content changes. I've seen it quite frequently, and we have customers that have, before they started using Avalara, they've done a really good job of doing a lot of research in their states. And typically that's all stored in this really big and fancy Excel spreadsheet. Lots of colors, lots of cells, really nice, well organized. And it probably has taken them quite a bit of man hours to put together that type of spreadsheet, which is great for today. The issue falls when the state makes a change. States are making changes all the time. So as good as your spreadsheet looks, and as all the work that you put in on that spreadsheet, the issue that a company is going to face is that they're always having to update their spreadsheet. So it becomes a very, very manual process around, number one, keeping track of all the changes, being notified by the Department of Revenue as it relates to all the changes, and then implementing those changes into your platforms. Another issue that we see with a lot of our customers is they're very omni-channel, which a lot of businesses are having to go that way. The days of only having one particular channel to sell into, such as your traditional sales force that walks out, targets a particular customer, knocks on doors, and then you're filling out an invoice, those days are quickly going away from us. You not only need to have that presence of boots on the ground, but you also may need a store that people can walk into. You may need an e-commerce channel for people to buy. If you're like Avalara, we use Salesforce as our CRM, which is a big platform for us. So when you think about multiple platforms and when you think about all of the different types of invoicing systems that you have, compile that with the complexity around making sure that you have all of the right tax rate calculations installed independently in each one of those platforms, you can see where there's a lot of room for error. Even if you've got all the resources that you can dedicated to it, even if you're doing all that you can to make sure that it's maintained, you just have way too much going on to be able to keep up with it. And typically what we find is companies won't hire a sales tax person and that's the only job that they do. Typically, someone's going to be running the sales tax piece, but they're also going to have to do payroll, corporate tax, balance the GL. There's a lot of different hats that a tax professional is going to wear. The other piece of this, and the third part of that slide that I want to make reference to, is that in that omni-channel environment and in this environment that we're selling into and where business is headed, everything has to be done in real time. When you think about how generations now are coming up and how technology is happening, I've got 2 young kids. My 2 young kids have never once looked at an encyclopedia. They've never once had to wait and get some sort of fax or some sort of scan from a newsreel at the library. They've always been able to get information right at their fingertips. And businesses, as everyone keeps coming up into the business world, that same requirement is mandatory. You must have real-time requirements and real-time determination for this ever-changing planet, for the ever-changing business world. A couple of other things to think about is when you look at sales tax and when you look to try to find the right piece of sales tax, just a little bit of background on me. Before I started working at Avalara, I worked for a very large PC manufacturer here in the Raleigh-Durham area. And I was still in sales, and it happened quite frequently to where a customer or a prospect, when I gave them a quote or a bid, they would want to know what that quote or that bid would look like. So I would go to Google, of all places, and try to research what the tax rate needs to be at a particular address or location, much like what a lot of our customers do before they start going to Avalara. A lot of times when we ask a customer about why they've made the switch or why they decided to look at a sales tax vendor, it's because the manual process that they have in place either became too cumbersome or they were just missing rates and information. So the next couple slides has to do with how, even again, if you can dedicate all of your resources to the project, you still may miss the boat. And the first piece that we look at is what's the address? Typically on an invoice, and I know that we're being very Zoho specific, so I'll stay to that. When you input an invoice into Zoho in your header, you're inputting 2 addresses. You're going to input a billing address, and then you're also going to input a shipping address. Typically, the billing address is where the product and merchandise is coming from, and the shipping address is obviously where it's going to. A couple of things that you can get caught up on. One, depending upon the state that you're located in, and depending upon where it's coming from versus where it's going to, can determine which of those addresses that you're going to ping. So if we look at these states on the left-hand side, that's an origin-based state for products. If the transaction is happening inside the same state that it's originating from, then you're going to use the bill to address as your tax rate calculation. That's kind of a tricky subject because a lot of companies that we talk to never know that assumption. So that's one piece of information hopefully you can get out of the webinar. The one on the right side, the far right side, is a destination-based state, which is typically all of our states. The state that we're in, which is North Carolina, is always going to be a destination-based state. So regardless of where the product's coming from or what state the product's originating in, you always will use the shipping address. Because that's the most common, that's what most people will assume when they're selling product. To make things even more difficult, to back up to the ones in the middle, you have two states, California and Texas, which makes things really difficult. It really depends on the specific location of the origin inside the state and what the specific location is for the destination in that state to make the determination as to which one they're using, the origin of the destination. Again, I've been here since 2014. I've seen this a lot. I am still not comfortable enough to tell you inside the state of California which one you should use. Really complicated stuff. The next problem that you're faced with is most of the time, even if you get the sourcing right, let's say that you've absolutely done everything correctly and you know that you're supposed to use the origin address and you're not supposed to use the destination address and you're doing everything you need to do. Well, now we run into a situation to where how are you going to make sure that you're collecting the right rate? Most of the time when you do this research online, you're going to get what's called a zip code based rate file, which essentially means that the Department of Revenue or whatever source you're pulling it from is going to look at a zip code and it's going to give you the highest tax rate that falls within that zip code. But here's the problem. There's 43,000 zip codes and there's 11,000 sales tax jurisdictions. So if you're going to use that zip code based rate file, you run into a situation similar to what you're going to find on my screen now. So I'm not going to pick on Colorado too bad. There's a couple examples where I will pick on them. And if you're in Colorado, I'll apologize for picking on your state on the front end. But your sales tax process in Colorado is complex at best. So what you have is a suburb of Denver, Colorado. This is Commerce City, Colorado. And it's the same exact zip code. What I want to notice is that the homes that are shaded in blue, they all have a sales tax rate of 9.25%. But homes that are shaded in green have a sales tax rate of 4.75%. For no other reason than just randomness. For whatever reason, there's a tax jurisdiction that adds a Commerce City tax that falls within the homes that are shaded in blue. So here's the real question. If you're using a zip code based rate file to make sure your calculations are correct, and you've done all the work that you need to do to make sure that you're calculating the origin versus the destination, what are you doing inside your platform today to manage this type of tax calculation? Because when you think about it, and when you think about the steps that go in at the government level as to who dictates all of this, this is obviously the person that lost the mayor election, and this is obviously the person that did win the mayor election. When you look at a rate calculation like this, you really think about a couple things. One, if the state auditor were to come in, would they really ding you for charging 9.25 when you should have been charging 4.75? The answer is no. They're not. They're not going to ding you for that. But if you collect the 9.25, they're going to expect you to remit that. On the flip side, if you're charging everyone 4.75, but the state expects 9.25, what do you think you're supposed to remit? The state's going to expect you to remit that 9.25. Well, now we're starting to really affect your bottom line. So you've only collected 4.75 from the customer, but you have to make up the difference on the 4.5%. So a solution like Avalara or a tax vendor like Avalara can save money right there off the front end because you're going to charge that right rate. But I don't want to focus on that. What I really want to focus on is what's that do to a customer? What does it mean to a customer that you're charging 9.25% versus 4.75%? Here's kind of what we've seen. Some of our customers, and I would say a good portion of our customers, work in a wholesale distribution type environment to where they're shipping a lot of product to customers. They've got bigger ticket items. They're not really selling one-off products to an end user. We certainly have those, but specifically for this example, I'll use the manufacturer and the distributor as an example. Typically, let's look at a lumber manufacturer. What will happen is if I'm a buyer of lumber, and you guys can put this in your own real life, let's say that you wanted to paint your house. If you go out and you try to find a painter, how many bids do you typically get? 3, 4, 5, maybe even 2. Typically, you won't just go get one. You'll get more than one quote. Customers that buy product from you are going to do the same thing. So here's the question. If you've got 3 different quotes, they're all 3 exactly the same. If one quote has 9.25% as the tax rate and the other 2 have 4.75%, which one are you going to go with? When you really think about it and you start to peel back the layers of the onion, If your tax rate's costing you business and it's costing you quotes because you're not doing it correctly, then what are you really thinking about from a compliance perspective? That's why it's really, really important for you to make sure that you get compliance right. If you want to continue to be manual, not a problem. Just make sure that you're picking up on all the things that you need to pick up on to make sure that you're doing it correctly. What you'll find is that that's a very, very difficult thing to do. Nick, any questions in the comments, or are we good?
We're good right now.
Okay. So what does all this mean from a Zoho perspective? So a couple of things to think about. Let it all get caught up. So a couple of things to think about. So Avalara, who's sponsoring the webinar, is a cloud-based application. So that essentially means that we're not going to require our customers to import our content into their platform in a manual process, much like the way that you're doing it today. To get Avalara engaged inside of Zoho, it's a two-step process. Step number one is that we're going to connect Avalara inside of Zoho. It's already there. For those that are using Zoho and for those that have seen it, the Avalara application is already embedded inside of Zoho. We just need to go in and turn it on. And that's really step one. But going back to the idea of an omni-channel environment, if you think about a company that's using an e-commerce platform, they're using Zoho, they're using a CRM, and then let's think about even throwing in a recurring billing setup like a Zora or an Aria. That's 4 different systems that we need to plug into. And Avalara has relationships with over 570 different vendors to where, for lack of better words, it's plug and play into the application. So that's step one. To touch on configuration really quickly, there's not a lot of heavy lifting from an IT perspective. Because those relationships have already been built, and because those APIs are already turned on and ready to go and certified, there's not a lot of heavy lifting from the IT perspective. Step two, however, is where we lean on our finance team. And this is where we lean on the tax team that's going to be using the Avalara application to make sure that we configure that sales tax profile correctly. Step two is where you're going to tell us where you have Nexus. Step two is going to tell us where you file and remit tax. Step two is also going to tell us what types of products and services that you sell. We'll get into a little more of that as we go through the demo here in just a few slides. At a really high level, this is how the Avalara solution is going to work inside the platform. As I mentioned before, Avalara is the cloud-based application that sits in the middle. For lack of better words, it's the one source of truth as it relates to your sales and use tax profile. And we have all of these different integrations that have been built. And once they're plugged in, on the left side of the screen, every time an invoice gets generated inside of Zoho, transactional data is going to get passed up through that API into our tax engine. In about half a second, we're going to evaluate that invoice, and based on all the factors that we require for a tax rate calculation, we're going to return back to Zoho a line item tax calculation for that customer. Whenever a rate changes, if there's any content changes or any update changes that need to occur in our tax engine, we have a tax team here at Avalara that's responsible for going out to the DOR sites, researching those sites, researching other content avenues, and importing all of that information directly into the tax engine in real time. Avalara has a couple different guarantees in our SLA, or in our master sales agreement. One of those has to do with guaranteeing that tax rate calculation. So we'll guarantee to our customers all the time that if you've configured the sales tax profile correctly, that we will always maintain the appropriate rates, rules, and boundaries for your products and for your Nexus states. The other piece of the guarantee for Avalara has to do with the filing and the remittance piece, which is the top arrow illustrated on the right-hand side of this slide. We have a lot of really good information and data from having all these tax calculations. We know by summarizing by state, by jurisdiction, how many sales you've had in a particular state. And we can also break out how many of those sales have been tax exempt or non-exempt. I'll show you that in the demo in a second. So a really good service that we offer our customers, that in addition to the tax engine, is that we can file and remit those tax returns on behalf of our customers in a real-time fashion as well. I'll show you how that works in a little bit when we do the demo. So one more thing to think about, this is the algorithm and this is the steps that are necessary in making a tax calculation inside of the Avalara platform. And if you think about it outside of Avalara, this is really what's required to happen every single time an invoice gets generated if you want to be compliant. The difference is with Avalara, I'm going to automate this process. If you're not going to use someone like Avalara and you're going to do it manually, then you've got to come up with a way inside of your system, in this case Zoho, to manually give you this type of output. The first thing you want to look at is nexus. As I mentioned before, if you're not required and you don't have that nexus triggering activity, you are not required to collect sales tax. So if there's someone on the webinar that has an e-commerce site, they're based in North Carolina, no other employees, no other inventory, the only state you're residing in is North Carolina, even though you're selling online, you're not required to collect tax all across the country. I've heard that very, very commonly. It's illegal to collect tax in a state where you're not registered. If you do collect tax from a customer where you're not registered and you fail to remit it, if it's less than 500, it's a misdemeanor. If it's more than 500, it's a felony. So another gotcha, if you're on this webinar and you've been collecting tax in an omni-channel environment because you think you have to, if you don't have Nexus, stop collecting tax. If you've already collected the tax from the customer but haven't remitted it, give it back. Next thing I'm going to look at is the customer's taxability. Another thing to think about, I gave an example before of a wholesale or a distributor. If you're not selling to the end user, you're also not required to collect sales tax. The only person in this whole buying chain in the United States that's required to pay sales tax is the end user. That's not the case in the rest of the world. When you think about a VAT tax or a value-added tax, that's the tax that everyone else is using, except for the United States. It's much simpler. It's much easier to understand. However, everyone throughout the supply chain pays the VAT. It's not just the end user. In this audience, and what we're speaking to specifically today, most of our customers that are using Zoho don't have that VAT requirement. It's only in the US. So the other piece that we look at is if you're not selling to the end user, then it's up to you to collect a certificate from the person you're selling to prove to the state that you didn't have to collect that tax. You may hear of it as called a resale certificate or an exemption certificate. Nonprofits will give you that. And it turns into a really sticky situation because for the most part, companies that are collecting certificates today, they're collecting a piece of paper and they're taking that piece of paper and they're storing it in a filing cabinet. In today's world, that's really, really not the most efficient way. Let's go back and look at our cell phones. 15 years ago, my cell phone had a flip to it. It was about the size of a little travel mouse, and I could put it in my pocket and no one would know it was there. And it would probably take me on average 15 to 20 minutes to send a thank you text to my wife. Fast forward to today, data is at our fingertips with our smartphones, whether it's Apple or whether it's Android. If you're in a process of taking pieces of paper from a customer and storing them in a filing cabinet, you're using flip phone technology. There's ways to automate that process. There's ways to automate the way that you collect those certificates, store those certificates, and maintain how and why those certificates expire. I hear it quite frequently from CFOs and from accounting professionals in very big companies that are doing their certificates in a manual process, and an audit takes weeks and months to complete just because you have this period of gathering data. When you think about automating your compliance process, whether it be with Avalara or with someone else, think about automating the way that you collect those certificates, then your audit process becomes a lot simpler. So that's step 2, looking at who that customer is. Step 3 is looking at product taxability. That's really important. We think about really simple things. We have a customer that uses Avalara that's a very, very large chocolate manufacturer. I'll save the name. But the only reason that company decided to buy Avalara is because of one ingredient, and that ingredient is flour. Because see, if chocolate has flour in it, it's milk chocolate, and it's taxed one way. If it's dark chocolate, which means it doesn't have the flour, it's taxed a completely different way. To make things even crazier, when you think about a peanut, same types of states, the same company that manufactures chocolate manufactures peanuts. And we really start drilling down to not only what are the ingredients, but what's the content of those said ingredients. See, a honey roasted peanut has a higher sugar content than a salted peanut. So it's taxed completely differently in the middle part of the country because of that sugar content. So I hear it quite frequently, and Nick hears it all the time, that, well, Chris, we really don't need to use a solution like Avalara because we sell clothes, or we sell chocolate, or we sell XYZ. The assumption is that product is going to be classified the same in all states, and that's just not correct. Okay, a couple other things. Again, this is just another reiteration of what Avalara can do. We're looking at address validation, which is a point that I haven't hit on before. When we're bypassing those zip codes, Think about this slide. I show a couple back where one house was 9.25, the other house was 4.75. What Avalara is going to do with that shipping or that origin address, depending upon the source, is we're going to convert it to lat long. So that means we'll validate that address. If you are shipping product out to customers and you're not validating the address, then you're spending money when UPS brings that back to you because the address is bad. One of the other added features of an ROI perspective for Avalara that has nothing to do with tax is that we'll make sure that every single address inside of your customer master list is absolutely accurate based on USPS. So a couple things. Avalara's got quite a few customers. We've got quite a few people that you've probably heard of that you didn't even know that you were using Avalara. So if you went and bought a cup of coffee at a Starbucks, you were using Avalara. If you filled your car up at a Walmart gas station or at a Valero gas station, you were using Avalara. If you bought some shoes from Adidas.com, you've absolutely used Avalara. If you ever bought a Groupon, you were using Avalara, okay? So there's a lot of different companies that are using Avalara that you don't even know about on the back end. And that I'll say is a good thing and a bad thing for Avalara. When we go to do a demo for you and we do a deeper dive after this webinar on your specific business case, there's not going to be a whole lot for me to show you on the back end about how Avalara is going to work. That's the advantage. What we don't want to do is interrupt your current flow. We don't want to go and retrain your whole staff. We just want to make sure that when you create an invoice, the right tax is set up on there. And our technology is specific to make the user experience very easy, and it's used to not slow your business down. It's used to automate. I mentioned before that we have a lot of different integrations. I show the slide just to kind of illustrate that we're very scalable. Zoho customers can sometimes outgrow that particular platform, and they want to grow from a Zoho platform into a different type of ERP, such as a NetSuite or an Epicor, an SAP or Sage. You may want to add other platforms to your technology stack, such as a CRM or billing platform. We see it very common now that POS has become very popular. Think about not just a POS and a brick and mortar. That's an easy one. Think about the last time you went to your local farmer's market in the summer and bought a piece of fruit from a farmer. They probably had a Square device plugged into their phone, and you swiped your card on top of that phone. So think about that farmer's market being set up in one location today and another location tomorrow. You've got to be able to ping the location that that POS system is located to make sure you're charging the appropriate tax. A couple more examples of logos of different integrations that we have. Hopefully a lot of this is familiar to some of you guys. So we've got a pretty good breadth on what you're looking at from a customer's perspective. This is just, excuse me, this is just a sampling of some of the customers that Avalara uses. I'm sorry. This is just an example and a sample of some of the different customers that are using Avalara. Very large software companies like NetSuite, that we have an integration with them. They're actually using our software engine internally to calculate their tax. And as I mentioned, if you ever bought Crocs, Converse, or Adidas online, you were using Avalara. So to touch a little bit on the implementation perspective, as it relates specifically to Zoho, there's not a lot of heavy lifting from an implementation standpoint. This is an example of what a timeline could look like, depending upon what kind of resources we both have available at the time. So now again, starting at the top, number one is just activating your Avalara account. If you wanted to start using Avalara as your vendor for sales and use tax, then you would sign an agreement with your sales rep. We would process the order on our side, and then you would get assigned a Go Live coordinator. The Go Live coordinator is a one-on-one relationship in which we walk you through setting Avalara up inside of Zoho, configuring the sales tax profile in the dashboard, install and configure the integration and run testing transactions to make sure you're good with it. If you wanted Avalara to remit the tax on your behalf, then we would set up your filing calendars based on your requirements. We would execute a funding power of attorney so we can remit the tax, and then we start doing filings on your first couple filing cycles to make sure that you're correct. I'm going to switch just a second and pull up a different web address and a URL so you can get an idea of what the touch points look like inside of Zoho. Nick, any questions so far in the chat window?
Not as I see right now, no.
I must be doing a great job of explaining things.
Yep.
Or I've lost the audience. Either way, we're okay. So I'm on the Zoho website. And really what I've done is this URL is in the slide that Nick will send out after the presentation. So this URL is to our Avalara Help Center that I'm underlying here. As soon as you click on the link, you're going to get directed to this URL. I won't bore you by going through everything, but I just want to give some illustrations on how there's just not a whole lot to it. The first thing that I would point you to is when you go look at the tax rate section, the button to use the Avalara integration is already sitting there. There's really not a whole lot that you guys would need to go do. So once you set up and using the Avalara integration, this is what's going to tell Zoho to no longer use all of the different tax tables that you're having to manually keep up with today inside of Zoho. One of the things that we'll look to do is we'll map. I've talked a couple times during the webinar about product taxability. I gave the example of chocolate in the middle part of the country. So there's a specific Avalara tax code for chocolate that has flour versus chocolate that doesn't have flour. I'll show you how that association happens. But we have a pretty common question about how do we know? How does Avalara know that this chocolate only has flour in it? So when you're looking at your Zoho item list and you're creating this new item, you're going to tell us what the name of the item is, what the number of units are, and then here you're going to be able to toggle and select an Avalara tax code. So every single time this item of notebook comes across our API, we're going to know to toggle this particular Avalara tax code to make sure that we've got the right tax calculation from a product perspective. The contacts tab is very important, especially if you're a Zoho user that's that's in that manufacturer and the distribution vertical. Again, as I mentioned, you're not collecting the tax, but you are needing to collect a retail certificate from that customer, so you can prove that they're actually non-exempt. Excuse me, I meant to say exempt. Your transactions. So when you come to do a transaction, if you're not going to be exempt, then really all you're doing is coming down and you're creating your customer, your invoice number, your invoice date, and then here's your invoice details. Just to re-illustrate the importance of configuring this correctly, as I put my 4 items and my rate of $20, this is my tax code for the cotton shirt, and this is going to give me the appropriate amount. For whatever reason, at this location in Minnesota, this particular tax code is showing that this cotton shirt is not subject to sales tax. From a customer-facing standpoint, you have a couple of options inside of Zoho. The example that I'm illustrating for you now gives not only the total tax, but it gives a breakout of what the different jurisdictions are to come up with that total state tax. You do have the option inside of our integration to only show the total tax. However, on the back end, which I'll show you in a moment, you'll always get this breakout of tax on the back end. So even if you don't want that to be customer facing, you can absolutely, you would absolutely be able to break it out on the back end. So shipping we'll talk about in a moment. Applying a discount. So applying a discount is really not a big deal for Avalara. I'm not really sure how much discounting or how many incentives you guys offer on your side, but it's a good chance for me to talk about a credit memo as well. So discounting, we're always going to look at the total amount, not the amount before and after discount. So if you happen to have an item that's list priced at $100 and you want to discount it by 20%, we're going to give you the tax based on the $80 amount that you're passing across versus that full dollar amount of $100. When you look at a credit memo, which is very common, we also process credit memos and review them in the same way that we handle our invoices. So if you're in a situation to where an invoice was generated this month, you committed the invoice, you remitted the tax this month, and then you do a credit memo the next month, then we will absolutely credit back the memo on the appropriate date. And then if you wanted to just carry over the credit to the next filing period, we keep track of that on our end. So I'll get out of the Help Center and I'll jump into the Avalara dashboard, just so hopefully you can get an idea of what the Avalara solution is going to look like. So again, as I mentioned before, it's good news and it's bad news on what I can show you in Avalara. There's really not a whole lot to show you. Once it's been configured and set up correctly, the rest of it just kind of works in the background. Setting up the configuration is not that difficult. It's all done right here in our settings feature, just to give you an idea for what you're up against. Managing your account, super simple. You're just putting in your account number, you're putting in your tax ID number, and you're just putting in the information relative to your company. Excuse me. The next piece is telling us where you want to collect sales tax. Going back to the slide that showed the tax decision, step 1 is where you have Nexus. The bottom piece is where you're currently registered. To add a region, just click on the add region, and you're just clicking radio buttons next to states in which you currently want to start registering in. Once you've determined Nexus, the other piece is going to be managing your products. As we talked about before, you can do that inside of Zoho, but if you're using multiple platforms in an omni-channel environment, you probably want to come do that here. Adding an item is easy. The top number, the item code, is coming right out of Zoho. So we're going to say this is SKU 123, and we're going to say that it is chocolate. Well, let's use chocolate. Down here is our Avalara tax code. So I didn't want to use chocolate. Change the game up. Let's call it clothing. General clothing. So this is my tax code for clothing. Once that SKU number shows up and once the description and I click save, what happens at that point is every single time SKU 123 comes across through the API, we'll make sure that we're taxing it correctly based on that tax code. So that would be the second step. And for most Zoho users, once we get the Nexus configured correctly, and once we get the product mapping done correctly, that's really all that you would need to do from a setup perspective. Let me show you an idea on what a real-time transaction will look like. A couple of things I want to illustrate. One is how Avalara is going to take that shipping address and validate it. So the first example that I'll give is I'll just put in the zip code for my address. Again, this is what most companies are going to be using inside of Zoho with a manual process. So the only thing I've put for my destination address is 30024. I'm not going to have any type of varying taxability. It's just a $100 item. I'll save the line item and calculate tax. So just like that would happen inside of Zoho, in less than half a second, I've got the green OK that tax has been calculated. And if I want to look at the detail, I can see that it's a $100 item. It was all taxable. The tax rate is 6%. And then here's my breakout of that 6%. 4% to the state, 2% to Gwinnett County. When I go in and edit my document details, I want to change a couple things. I want to get away from just 30024. Let's go ahead and put a full address in. And all I'll put is the 240 Hammersmith Drive. I'll put 30024, and then let's validate that address. So just as I've mentioned, every single time you put an address in, we're going to validate it to the correct appropriate amount. I'm going to put the zip code +4, and this is what I'm going to use to toggle. Now when I say the document detail, let's calculate tax again, and what you're going to see is a change. You're going to see that the tax rate went from 6% to 7%. Reason being is this particular address of 240 Hammersmith Drive, though the zip code is the same, it actually falls into 4-size taxing jurisdiction, which is 1% higher than what you found in Gwinnett County. Changing things up a little bit, if I stay in the state of Georgia and we go add another line item, one of the things that I'll look at now is let's look at a service. Let me step back. We used clothing as an example before, so let me tie that back out. So clothing has some really interesting laws, particularly in New York and let's say Massachusetts. So I'll first go in and change my address. And I want to change my line item. So I want to edit the line item and I want to make this dollar amount $109.99. SKU 123, red shirt 1. This time I want to change my tax code. Let's go back to clothing. So something really interesting happened when I clicked calculate tax. So in New York, there's a threshold for clothing of $110. So any clothing item that's less than $110, which is my line item number 1, $109.99, it's non-taxable, and the whole amount is non-taxable. But the second that that closing item exceeds 110, which this item does at 110.99, then the whole amount becomes taxable. If I go and change my address and I change this from a New York location to one in Boston, they have something very similar, yet it's so different, which is pretty common in tax if you continue to do tax like we do. So now what I'll do is just go change the amounts, because that amount is a little bit different. And spoiler alert, the number is 175 if you can't tell. So now when I calculate tax, a couple of things are going to happen. So I still have that same concept that I had in New York, that if it's less than 175, the entire amount is non-taxable. The difference in Massachusetts is this. The item over 175.99, we're still leaving the 175 non-taxable, but we're charging tax on the 99 cents. So where in New York, the whole amount became taxable once it hit the threshold, in Massachusetts, it's only that dollar amount that goes over and above that threshold number that's going to give us that particular tax output. So the question that I ask very commonly is this. If you own a suit shop and you have two locations, one in New York and one in Boston, what are you doing inside of Zoho or inside of any platform to manage this type of tax liability or this type of varying taxability? Going back to the point that I illustrated in the beginning, even if you dedicated all of your resources to this and you came up with a spreadsheet to fix this and you did all of this wonderful stuff to handle this, Massachusetts will mess you up 1 weekend a year. And that 1 weekend a year happens when they do a tax-free holiday. Now what do? Because now there's no tax on particular items, but there is tax on other items. So not only do you have to manually keep up with everything that I've just shown you here, but now you've got to go in one time a year and manually update your ERP system to make sure you're calculating the right tax. All transactions that happen inside of Avalara are going to get stored here. So even if you have a customer that goes onto your website and they do an abandonment cart and they don't actually commit it, then we're going to capture that same information here in the dashboard. It's really nice to come back to the transactions tab and be able to look at it. So if a customer or you ever need to go back and look at how a particular invoice was taxed, you can open up the transaction based on invoice number and see all of the information that was passed via that API, and then take a look at each one of these line items. And so we can show you and your customer exactly how that particular line item got taxed. If for any reason a customer questions a particular tax rate calculation, or you have inquiries about a tax rate calculation, then Avalara can provide you and your customer with a letter ruling from the state and from the jurisdiction confirming that particular calculation. Another thing to look at is the return service that Avalara offers. So as I mentioned in a previous slide, we capture a lot of really nice information when we're making all the tax calculations. We know based on your configuration where and when you need to file. So one of the services that Avalara can offer is one in which we fully automate the way that returns are filed and remitted. Here's a good example of a customer that's in our demo account from May of 2017. Looks like they have about 1, 2, 3, 4, 5, 6, 7, let's call it 12 states that need to get filed this month. And each one of these different jurisdictions have different amounts that are due. The top line, which is 101.0530.97, that's the total remittance for all jurisdictions. So what you guys would do on your end is you would fund Avalara that 101, and that's done through an ACH. And once you have funded that 101 to Avalara, it's then Avalara's responsibility to go back to each jurisdiction and file the sales tax return on your behalf. If you need to see details on what and how we're filing, you can simply click on the jurisdiction, click on details, and then see a breakout of how all of the summaries and information happen to get this particular filing. If you're unsure as to what form's being filed, when I go back a screen, I'll show you a template of the tax return form that needs to get filed so you can confirm that this is the appropriate prepayment form. What I'm showing you now is for California. They're called the Board of Equalization, which is not the Department of Revenue, and it's a little bit different for them, in which they require customers to remit payment every 12 months, but then they also require you to file a return once a quarter. So because I pulled information in May, the only thing I'm showing that needs to get filed is this prepayment form. If I go back to my liability worksheet and I change my month from May to June, you'll see a little bit difference on the California piece, just because not only do I have to make that monthly remittance like I typically would, but I also have to file a quarterly return. So if I look at California today, I can see a breakout of both of those transactions taking place. So this is where I've seen, and you'll see the form is now different. Now it's my actual return that's being filed, not just the prepayment. So a really nice advantage to Avalara is that you can outsource everything related to your filing. And if you're in a situation like you've got here with California, then we can manage the different types of filing calendars that you're going to be up against and make sure that we accrue the right amounts when it's appropriate and file the right amounts when it's necessary. This is the other part of our guarantee. Another thing that we guarantee in addition to the tax rate calculations is that we guarantee the returns are filed correctly and accurately and on time. It's not required for our customers to use this for tax return filing. You can absolutely just purchase the tax engine if you'd like and continue to do returns on your own. If you wanted to go that route, you would need to come out to Avalara's dashboard and you would need to look at a reporting feature so you can have all of the data that you need in order to file those returns. So coming over and pulling a tax filing report, I can look at a sales and seller's use tax jurisdiction by detail and run a report against whatever I'm looking for. Because we were looking at May and June before, let's go back and run that data here. So that same data that I showed you before in a nice little widget that's very nice and pleasing to the eyes, when you really drill down to it for a tax professional, this is what we are more used to seeing. We're more used to seeing an Excel type format. So if you did not want to use Avalara for the filing, you can absolutely come out to the tax return report and you can pull a report based on state. And as I continue to drill into this report and start looking at hyperlinks, I will eventually start drilling into each and every invoice that's made up that total tax liability. What would happen is that if you're using a service like Avalara, you would typically no longer use the reporting functionality that lives inside of Zoho. So as I mentioned before, there's not a whole lot to show, but there's good news and bad news with that. The good news is once you're configured and once you're set up and ready to go, Avalara is going to work in the background. The bad news is I don't have a lot of fancy toys to show you inside of a demo. Any questions, Nick?
No.
Okay.
We're good.
All right, so I'm going to turn things over to Nick and let him talk about some pricing that we've put together. Let Nick introduce himself and talk about where we are. We may finish a few minutes early, so if there's no questions, we'll go ahead and stop the webinar in a few. But I'll turn it over to Nick to start talking about pricing.
Thanks, Chris. I appreciate it. Yes, we wanted to put together some really starter packages. We understand a lot of these businesses are brand new to Zoho and want to be able to get the ball rolling. So we went ahead and put together two. One is without go live support and one is with go live support. What that means is if you do choose to have go live support, it's about a 3-month sandbox or live team support. So they help you for 3 months putting together a testing environment and providing you with full integration, questions, anything you need. Not to say that the other one isn't capable without the go live team, so we provide both. The one on the right is $15.41, and that provides 12 returns a year, which is 1 a month, which is generally the first, when you're starting a business, is usually a good starting point. And then you get up to 250 invoices that we automate. Again, that's $1,541. On the left, you can see that there are the same price points, except for it's $850 without the go live support. Again, you get the 12 returns, up to 250 invoices automated, and then it is self-implementation. And Chris walked you through that implementation. We here at Avalara can help you from a rep perspective, walk you through that if you don't choose to go with the go live support. So all in all, that's the starter package. If you do have more invoices than 250, we can certainly customize those for you. We can meet with you personally and talk to you about those. So that's the enhanced starter package. We have the capabilities to email this to you after the presentation, so you have this at your fingertips, whether you need to present it to your clients, if you want to personally look at it for your own business, but it is there for your accessibility. Any questions on the starter package, you can again reach out to me. I have my information here for you. I like to call myself your friend in business because I help to kind of make sure consulting and providing a long-term partnership a friend is someone that really considers being a long-term person in your business professionalism. So really, Chris, again, thank you for the presentation. Thank you guys for attending. Again, here's my information from my cell phone. You can also email me. I'd love to set up a follow-up call with each of you on the call today to deep dive into your current situation. We would love to kind of narrow down what you're looking for from a cost perspective, a budget perspective, how Avalara can fit within your compliance, and then go from there. So again, thank you so much for attending. I greatly appreciate it and look forward to follow-up from all of you. Have a great day.